Hi everyone, and we are from Group 2, and it's our great honor to present our final business reports for our project. And here's our team members, which are Heringa and Shinji. Today we are not just presenting a plan, we are sharing a story of how we built a micro business from scratch, the real challenges we faced, and the actual financial results we achieved. And let's begin. For business snapshot, first, let me give an overview of our business model. We sell hand-pure soy wax candle with the mission natural, safety, affordable elegance. Our target marketing is especially UKM students who are facing exam stress. To ensure profitability, we adopt a lean operation model. This means to minimize our overhead, we strategically avoid the platform fee from Shopee and Lazada. Instead, we utilize pure social commerce channel like Instagram and WhatsApp. This strategy allows us to keep our fixed cost structure extremely low. And here's is our Instagram account profile. And for production and marketing, on your left you can see our procurement and production. We source raw material soy wax and essential oil directly from local supplier to reduce our lead time. We managed to entire manufacturing process in our dormitory. It wasn't easy, and we have to strictly control our curing temperature to ensure the product quality. And this hands-on approach gave us full control over our product cost. And on your right, you can see our marketing. We did not outsourcing this. We create our own digital assets using Canva. We launched teaser campaigns on Instagram to generate organic traffic, and every image you see here represent our efforts to build a brand with zero marketing budget. And for sales, we divided into three phases. Phase one was market testing. We launched at a standard price of 15 ringgit. However, the market response was low. We faced price resistance from students who realized our product was perceived as a luxury rather than necessity. And in phase two was our strategic pivot. In week 12, we analyzed the situation and we decided to restructure our pricing strategy. We introduced a buy three get one free bonding strategy, and the goals was to increase the transaction value by encouraging group buying among roommates. And in phase three was execution. The strategy worked and orders spiked. If you look at the bottom right, here's our proof transaction, receipt and photo of our last mile delivery. Walking to Botanica and hand over the goods, we successfully complete the order to cash cycle. And for budget proposal versus actual. In our proposal, we budgeted for 5,000 in revenue, but in reality, we only achieved 1,000. While this shows an unfavorable sales variance, please look at the bottom line. We generate a net profit of 300 ringgit, achieved a 30% profit margin. And how did we stay profitable despite low sales? We applied just-in-time inventory management. We did not sink capital into excess stock, and we only incurred variable cost. When we secured order, there's no strict over our cash outflow prevented us from losing money and outsold inventory. And for PVC data breakdown, let's look deeper into our cost structure analysis. We classified our cost into two categories based on product behavior. First, variable cost. This includes wax, oil, and packaging. This represents 55% of our sale revenue. Second, fixed cost. By operating our dorm and walking for delivery, we kept our fixed cost at a minimum of 150 ringgit. This resulted in a contribution margin ratio of 45%. percent. This metric is crucial. It means for every ringgit of sales, 45 cents is available to cover fixed costs and contribute to our net profit. And also is the break-even point analysis. Based on the contribution margin ratio, we calculate our break-even point. Calculation shown only needed to sell 333 to cover all costs. Since our actual revenue is 1,000, we operate significant above of our break-even line. This gives us a huge margin of safety, even if our sales had dropped by 50%, and we still be profitable. This low break-even point proved the resilience of our business model. And thank you, that's my part.
Hi everyone, this is my part. For impact of promote a key managerial questions is did the buy 331 promote kill our profit? From a cost accounting perspective, yes, the promote increased our variable cost material. However, strategically it was the right decisions. We traded lower unit margins for higher sales volume. This increase in volumes allow us to maximize our total contributions money and clear our inventory before the deadline. It was a calculate trade-off. Next is strategy and changes for our selling. Reflecting on our strategy positions, we identify our strategies and challenges. Our strategies was agilities. Unlike big corporations, we could adjust our pricing strategies overnight based on market feedback. Also, Learn Again provides tips on WhatsApp yield a higher conversion rates than public channels. Our challenges, you can say, was scalability in logistics, relying on manuals, deliveries, working created a bottleneck well as save cost. It was labor intensive and physically demanding. In a real business expansion, Scanrail. We should need to invest better logistics solutions. For the key takeaway, what are our key takeaways from this project? First, cost behaviors applications. We learned that distinctions between fixed and variable cost is the essence of managerial decision-making. Second, market adaptabilities. We learn to pivot our strategy based on real-time data. Our data is very real and turning a slow start into a profitable finish. Third is the cross cultures negotiation. Conducting business in English and Malay enhance our soft skills and confidence. Okay, thank you. In conclusions, thank you to listening. Beauty Candle was a successful application of theories we learned in the class. Thank you. If you want to buy our product, you can click the links in here. We also have. Thank you, everyone.